Petty cash. As stated in the ACCT financial textbook, petty cash is a small amount of cash on hand kept within a business which is for small expenditures. As an example, let's just say we want to start a petty cash within our business and we want it to be $12. However, a petty cash can contain as much cash as the business wants. To form the petty cash, journal entries must be written. It is a very simple entry which is the same every time a petty cash is formed. Standard entry format with the date, description, and debit and credit columns. We are forming our petty cash on the 1st of July, and we debit petty cash as it is an asset which we are increasing, and credit cash as we are decreasing the asset whose normal state is a debit. The petty cash and the cash journal entry amounts must have the same amount of money debited and credited. Recording the expenses for petty cash only happens once the petty cash needs to be replenished, so all of our journal entries are made on the same date. Let's say out of the month of July, out of our $12, we spent $2 on postage, $5 on stationery, and $1 on miscellaneous expense. In total, we have spent $8. Let's put this in our journal. We have recorded all the expenses in the debit column, listing them separately. With each of their amounts, then we credit the amount of cash that needs to be replenished in the petty cash, in order for the petty cash to have a total amount of $12 again. We have $8 worth of receipts and the amount of money missing from the petty cash is $8. This is a very simple petty cash example. However, let's just say we spent $2 on supplies. The extra $2 brings the expense up to $10. With the journal entries here, you can see that the amount of expenses does not equal the amount of cash needed to bring the petty cash back to $12. Our expenses were $10 and the amount from petty cash is only $9. This is where the cash over and short entry comes in. This is to ensure that the petty cash balance is always brought back to the original balance. Back to our example, we can see that there is $10 worth of expenses and $9 worth of cash entry. Due to the expenses being higher, the cash we simply put the cash over and short entry with the cash. Crediting the cash over and short entry, both sides are now balancing to $10. Say we didn't have the supply expense and the amount we needed to fix using the cash over and short. Due to the expenses being lower than the cash, we would debit the cash over and short with the amount being $2 to equal both amounts back to $10. Thanks for watching.